You've been in real estate space as a wholesaler for the last 6 to 12 months. Your cash buyer list is decent, but it can be better. And you continue to spend a lot of time on finding those cash buyers. When you feel like you're missing out on something or you're missing a piece of the equation, what if I told you DSCR loans are the piece of the equation that you're missing? So this week, guys, I want to talk about DSCR loans and how they can help you as a real estate wholesaler close more deals. So guys, here it is. I know as a wholesaler, you guys are looking to turn as many properties as quickly as you can for as much profit for your assignment fee. I get it. But also there's not an endless supply of cash buyers, or your buyers are looking for some type of financing or want to do a combination of cash and financing. What about the other worry? Your assignment fee. When you assign your contract over to somebody, what's the guarantee they're going to close? What, they sent you proof of funds? There's no guarantee. And by all means, I'm not saying a DSCR loan is guaranteed also. It is highly more likely to close if the information we talk about in this video is given. You're going to close more deals. So let's get into it. Number one, how can you make a DSCR loan work for you? Instead of just looking for cash buyers, you can be actually out advertising and marketing your property with a option for a DSCR loan. Or they can do a fix and flip. Whatever the case is, you have an option to provide financing. Now, that being said, you got to have yourself a loan officer or a mortgage broker that actually has that experience with those type of loans. Two, the assignment fee. Just like I said earlier, you're worried about the assignment fee and making sure that you're getting paid. Guess what? With a DSCR, I work with lenders that actually allow the assignment fee to be put into the back-end purchase agreement. So you've got your front-end purchase agreement. We'll use round numbers, $100,000. You're assigning your agreement for $10,000. So the back-end purchase agreement is $110,000. That becomes the purchase agreement on record with the lender, and we go through that process. Question that I get predominantly from wholesalers is this: it's going to take longer to close. Typically, no, 2 to 3 weeks. The only thing that I can tell you that can potentially slow us up is getting an appraisal. If the appraisal is ordered as soon as we have the purchase agreement signed and you bring me in right from the beginning, we will get that appraisal done in 3 to 5 business days. While that's happening in the background, we're working on title at the same time, because the lenders that we work with, they want a full package to be submitted to them so we can get conditionally approved, which means we're ready to rock and roll, which there could be some conditions, items that need to be cleared up. And then what we'll do from there is resubmit back to the lender to get clear to close, and then we'll schedule you up at title to close. The caveat in all of this is this. Sorry, bad English. The caveat in this whole piece of the pie here is the appraisal. So today, cash buyer is just going to go out and buy it. There's no appraisal needed. They might do an inspection. They should do an inspection. But if they don't do an appraisal, they're basically buying the property, what they think it's worth based upon comps from Zillow or wherever the case they're using. I don't know. The appraisal will have to come in. So if that, like we said earlier, that purchase agreement on the front end is $100,000 and the back end's $110,000. Let's say it comes in at $105,000. Now you've got to make a decision. Your back end buyer just appraised the property as is, and it came in at $105,000. That's what the lender is going to use for the purchase amount, and then they'll base the loan off of that. So you're $5,000 short. So would you rather take the $5,000 and run, or would you like to cut bait and go another route? That's going to have to be solely up to you. Ultimately, you have to make that decision. Most of the wholesalers I work with, they find a middle ground with the buyer and either split the fees, split the numbers, Go back to the seller, renegotiate, which is probably the last thing you want to do, but some actually do. Or the buyer will actually just pay for it in full and take it out of his or her pocket. There's also an option, but there's a cap. There also can be seller concessions. So you can offset some of the costs through seller concessions for your buyer. Most lenders cap it out between 2 and 3% of the purchase price. So on $100,000, that would be $2,000 to $3,000. So you'd have to be careful of that. So how does a DSCR protect your assignment fee? It does very easily. When you put that purchase agreement together and we submit the whole loan package to the lender, your assignment fee is now etched in that purchase agreement to where then once we get clear to close on the ALTA or the HUD, whatever you want to call it, closing disclosure, you will have a breakdown of all the fees and all the costs. Guess under the fees, you're going to have your assignment fee, your name of your company, ABC Lending, or sorry, ABC Real Estate, $5,000. It's there. You're going to get paid. Now, what's the difference between assigning your fee and then doing a DSCR loan? I don't know. That's a question for you to ask. I know if I'm working with you, I will keep you in the loop throughout the whole process to let you know what's going on. If there's any challenges, any hiccups, if everything's running smoothly, you're going to know either way what's going on. When you submit that assignment fee to a cash buyer, guaranteed you have that he or she's going to close. I don't know. They can have a proof of funds. I guess the next question from that standpoint would be, do you require them to put cash into the actual deal to where you have the earnest money deposit sent to title and it's non-refundable? Whether it be $2,000, $5,000, whatever it is. What skin in the game does that cash buyer have? If something goes awry, is there enough skin on their side to be able to say, I don't want to walk away from this deal? How do you structure them? I don't know. That'd be good. I'd love to have some conversation with some wholesalers about that. Because from a DSCR perspective, once I get started with your buyer, I have to pull their credit. It's the only piece of personal information that I pull, and that's the entry point. Higher the credit score, the better the rate. Once I pull their credit, they're typically in and they're ready to go. So we are just launching and moving. If they are closing an LLC, all I need is some basic documents from them. And then to prove that they have the funds, I ask for 2 months worth of bank statements. The funds are going to be used for closing costs and down payment. That's it. Everything else is done by the lender, and the lender makes it very simple. If the property cash flows, we're good. And let me back up on a couple of the videos that I've done in the past. A DSCR ratio of 1.0 is not cash flowing. That ratio means that if your mortgage payment is $1,000 and your rent is $1,000, that ratio means that is all that's being covered. So if you have property management, it's not covering that. It's not covering any type of reserves for any type of repairs that need to be done. And oh, by the way, last time I checked, you got into this business is because you want to make money. So you'll be negative cash flowing on that property if you're sitting at a 1.0 DSCR ratio or lower. Go lower, it's not even covering your PITI, principal, interest, taxes, and insurance payment. That's what your lender is going to set up for your buyer. There are exotic ways to do these DSCR loans, but I don't typically do that. If you're looking for exotic ways, I'm not your guy. My thing is this. We want a solid asset that's producing income that will continue to do that for the foreseeable future. to where now you can take some money out of it every single month, put a couple dollars in your pocket. But better yet, let the asset grow in value, be able to refinance it, take some more cash out, go buy another property. But if you're at a DSCR ratio of 1.0 or less, that ain't going to happen. And more than likely, your lender is going to charge you an arm and a leg for an interest rate, and you might have to put more money down. Your buyer will. So guys, as we wrap this up, wholesalers, your assignment fee is locked in to the back end of the purchase agreement to where that is submitted to the lender, and your fee will be broken out on the closing disclosures / Alta document. Time frame, 2 to 3 weeks. All depends on documents being moved, but also the appraisal. If we get the appraisal first thing, as soon as you guys lock up a purchase agreement, we typically can get it in 3 to 5 business days, sometimes less, sometimes more, but that's the ultimate goal. And 3, I will keep you informed throughout the whole process, whether good, bad, or indifferent, of what's going on with your buyer to ensure that you understand that the deal is going to close. I have closed over 65 DSCR loans in the last 12 months. A little over 30 of them are with wholesalers. So I have the experience, I have the knowledge, but better yet, I understand the pain that you guys go through every single time that you have to find a cash buyer. Now you've taken a sliver of a market and now you've increased it dramatically. Now you can market a property, not to cash buyers solely, but now you can DSCR buyers. You can look for people that are expanding their portfolio and want to use maybe a portfolio or a blanket loan, but you have more options. Take a look at it. If you have questions, please reach out, comment, subscribe, share. Love to hear what you guys are doing. Love to connect. Stay safe, stay healthy. I'll see you guys on the other side.